Hey everyone, today we're going to analyze the stock of a company called Walgreens. The ticker is WBA. So, what caught my attention about this stock is it's really one of the most unloved stocks in the market right now. It's trading at $35, which is like less than half what it's trading at just 3 years ago. And really, it hasn't traded at this level since 2012. So, let's see what's going on with this stock. Why has it gone down so much? What whether that's deserved, or is there like some kind of opportunity here? Because when a stock doesn't make any progress for 10 years, um, kind of have to wonder what's going on. So let's the first thing I like to do is just go to 10K, which is on the SEC website. Watch my Apple video for the first part if you have questions about where to find the statements. So I like to read just the business section. What does this company do? Okay, so they're the largest pharmacy in the U.S. and Europe. Looks like they own a few brands. Walgreens. They own Duran Reed. Duran Reed is a pharmacy just like Walgreens. It's on the East Coast. Really, I've only seen it in New York. Boots is I've never seen Boots, but it's a UK pharmacy. And then Alliance Healthcare, which I think is a company that distributes like pharmacy supplies. Um, they also own about I think like 20%. Let me see if this says it right here. Amerisource. Okay, they own like 22.7 million shares of this company called Amerisource Bergen, which I think is like a wholesale pharmacy distributor. It'd be great if they told us what percent. Oh, okay, here it is, 27%. So they own like a third of this company called Amerisource Bergen. So I think it's a wholesale like drug distributor. Um, and yeah, if you have time, read all this. This really good color on the industry, on like competition and stuff like that. But let's dive into let's figure out what the street is, what this company is valued at, like how much can you buy this company for. So to do that, let's pull up the latest 10Q or 10K. Oops. Okay, go to the balance sheet. Look for shares outstanding. I'm sorry, that's on the income statement. Okay, 875.4. What are they trading at? 35.79. Which gives us a market cap of $31 billion. And remember, we have to add the debt, which is the short term, plus the long term. Didn't mean to put a period there. And we subtract out the cash. See if they have any long cash-like long-term assets. No, they don't. Okay. So Walgreens is a $47 billion company. You can buy this company for $47 billion. Let's see if that's worth it or not. So today we're gonna start with sales and with NOPAT like we did in the Apple video. If you haven't watched the Apple video, like watch it on 3x speed or something, basically to get a sense of how I set this spreadsheet up. I've emptied everything out, for Walgreens. No point recreating it when we've already got it. So just using it at this point. So let's start with sales, which is here, consolidated statement of earnings. Looks like the 3-month ended May 31st. They sold 34 billion. Oops. So it's kind of interesting that the whole company is worth $47 billion, and just in one quarter they sold 35 billion. Okay, so their price to sale ratio must be really good. Okay, after taking out the cost of those goods, their gross margin is about 19%. Definitely not Apple levels, but not too bad. Administrative SG&A costs 36.3 billion. Okay, and then they have this kind of weird line called equity earnings or loss in AmerisourceBergen. So remember how they own 30% of AmerisourceBergen? They've chosen to show the earnings or loss from their investment in this company kind of separately on the income statement. And in this case, looks like they earned 243 million. So that's a negative number because it's a reduction in cost, right? So this is actually a operating cost. So earnings is negative. Let us fill in Q2 of last year. Okay, sales growth, no sales growth, right? Almost exactly the same. Actually kind of impressive during COVID that they're able to keep sales flat. Okay, their operating expenses went way up, probably because of COVID. Equity earnings, strangely, they had a loss last year. And then let's look at their tax expenses. Okay, so because they didn't make any money this year, or this quarter, they have what's called tax benefit. So when you don't make money, when you lose money, you actually record a benefit that you can use to offset against like future taxes. So that's why it's actually a benefit. Whereas last year they made money, so they have to pay taxes. And then while we're at it, let's just put in the interest expense so we don't have to deal with it later. So interest is 155, interest and others. So 155, and they had other expenses of 34. Last year they had interest of 187 and other income of 182. Let's see if I'm missing anything here. Okay, it doesn't look like I am. So they had a pretty bad quarter, lost $1.5 billion. Not really surprising, might be a one-off because of the pandemic. We'll see how their other quarter shakes out to be. I mean, in like last year in Q2, they actually made a $1 billion operating profit. So we'll see. Let's open the next one. So let me know if it's helpful to see me fill in these numbers, or should I just fill these in off camera and then just go over it? Let me know in the comments. All right, so let's see how they did in Q1. 35,820, 28,307. Q1 should be a little bit more of a normal quarter because that was before the pandemic. That was really like in March here in the US. 28 other income. Oh, wow, it screws me up. It's always negative. All right, taxes, they paid 160 in taxes. Other income minus 25 plus interest 162. Q1 of this year 3 4 5 2 8 2 6 7 7 3. Yeah, their margins went down a little bit last quarter from 22%, 21%, and 19%. Not sure if we should make much of it right now. 83. Taxes. 226. Q. All right, we're speeding along here. This is November 30th, which is Q4. 34339 27077. Yeah, really stable gross margins, as you can see. It does look like their operating cost took a big hit, went up a lot because of pandemic. Otherwise, it's pretty, constant at like around $6 billion. Equity earnings. This part must be really boring to watch. You should watch it at like 3 times speed or something. Income tax provision 32. Trying to go fast, but I don't want to make a mistake that I have to correct later. Other income minus 35 plus interest expense 166. Taxes 180. Interest expense 161. All right, cool. Yeah, I mean, you can see they're not really growing their sales very much. Pretty flat, right? Single digit, low growth, as you expect from a pretty mature company like a pharmacy that's been around for a long time. Kind of keeping their growth kind of flat. Not really surprising there. At least it's not negative. So I've moved on to the 10K. And I'm just trying to find the financial statements. I think I must have missed it. Hold on. There it is. Okay. It's always the big block of white and blue. That's your tell. All right. So yeah, so last year their sales was 137 billion and they're only worth 47 billion. So it's like they're trading at like 1/3 of their sales, which is pretty interesting. Earning 164. Okay, what is their tax? Income tax 588. Okay, what's their interest expense? 704. Okay, I'm gonna hedge my bets and fill out the rest of this off camera because I think it'll take too long. So let's look at some general trends on Walgreens. So gross margin has been quarter on quarter decreasing a little bit, but pretty flat, around low 20s%. Operating cost around $6 billion a quarter, with it spiking up during pandemic, but we'll see if it comes down next quarter. Operating income, that they definitely make money. You can see that have positive operating income. Very low margin business, 3 to 4% margin. Kind of as you'd expect, right? They're not selling without Walgreens. You can still go to, if you don't go to Walgreens, you can go to CVS. You can go to what are some of the other ones like CVS? Can't think of any right now, but Rite Aid, right? So there are a lot of alternatives, a lot of companies, a lot of pharmacies that sell similar things. So it's not a differentiated product. So you expect their margins to be pretty low as a result of that. And that's not surprising. Doesn't mean it's not a good business just because there's competition. Clearly they still make money. Their NOPAT is pretty good. So it looks like just rough numbers on a trailing 12-month basis. Their NOPAT's about $4 billion. Obviously took a hit last quarter. Sales not really growing. Very very stable kind of business. So yeah, and it's 47 billion enterprise value. Lots of debt, $16 billion of debt. Not a lot of cash on hand. So we'll take a look next time what they do with their cash that they generate, because they do generate, seems like they should generate some cash. Obviously we're missing some inputs here. So yeah, that's my kind of first impression on Walgreens. Stay tuned for the next video where we'll finish the model and really dive into whether this company is undervalued or not. Thanks.